Kunal, hi, good morning. Irrespective of the volatility in crude, Kunal, GIFT Nifty seems a lot more stable this morning. What's your observation?
Yeah, I think that ebbing off of crude oil prices from 100 to 83, 84, the last I'd seen, I think gives a very strong indication that I think maybe the near-term worst for the crude oil prices, worst in the sense the rise in crude oil prices, I think is now behind. It's a good cool-off for the crude prices because this puts in a direct positive impact on our benchmark indices. Yesterday was one of the off days for the markets because the net market breadth, advances minus declines, was still on the negative side. But then it was because of the kind of pain which we've seen for so many sectors. FMCG, banks overall has been negative. You saw the PSU basket overall. I think many of the stocks like Coal India, etc., they were down. So I think it's got to do with those result-specific reactions. But once the market digests this, I think the market texture should improve quite well. I would look at 24,250, 300 as a potential near-term target for the index, which is what we scale back to the previous levels from where we slipped off 600 points in the last week.
But Kunal, can IT do it alone? I mean, seems like that was the case at least yesterday, wherein IT was the only island of safety.
See, I don't sense that IT alone can do it, but I think there are new sectors which are adding up. We were discussing realty, which has done reasonably well. Auto stocks have managed to make a very good comeback. So, the markets are finding its own beautiful way to try and balance out in terms of if one sector gets into a weaker. Last week or so, last month, rather the private sector banking stocks were the best performers, including the likes of ICICI Bank and some recovery in HDFC Bank, etc. This month so far, private and PSU banking names are the relatively top drags. And then you have the markets balancing out with IT, realty, and I think the auto stocks, media sector. These stocks have made a good comeback. So these were the underperformance in the previous legs. So it's like the market rotating itself, trying to balance itself out, so that at least we can tide away with the fact that this news flow and the volatility which is there. I think that's a phase which the markets are going through.
Kunal, the GIFT Nifty is at 136 points, but you don't have a good global cue coming in from a crude point of view. What's happening in Asia as well? Earnings has not been so great. What we saw yesterday, L&T was in line kind of earning which we saw, and as you mentioned that there's other sectors which are coming in, autos or maybe for that matter IT coming in, but these two sectors are not enough, and their weightage is very less, not even 1/5 of the index. How do you expect that index to move up? And given that the expiry, we saw a lot of shorts getting rolled over to the next series. We don't have much longs in the market today.
See, I think we went through a lot of pain when the global markets were enjoying. So I think it's good to see a reversal of that. So I'm absolutely happy with it, given the kind of pain which you're seeing across the global markets. But then coming to the second point which you mentioned, that if auto stocks and other names manage to participate, of course the weightage on the indices on the of these stocks on the indices is of course on the lower side. But then what it does, it just puts a strong positive sentiment across the street that if there are some sectors which are underperforming at certain point of time, it's not that these sectors are down and out. There would come a wave, there would come a phase where these stocks would try and catch up into the underperformance and then try and cover up and maybe come back to their mean reverting points or some sort of a breakout for themselves. So that lease of confidence which the market gives to those sectors, that's a positive sign. Now you go back maybe 3 months or 4 months back, when the markets were falling very sharply, there was hardly any kind of a reprieve for these stocks. There were points where there were sectors like realty, etc., which were down for 5 or 6 consecutive months or maybe quarters on a trot. So that tells you that the pain was very extended. And now the pain is getting a little bit more scattered. You're seeing one-off sectors, for example, the private sector banking names doing very well last month. They are now the ones which are being a little offset. What it does in this entire process, it just puts the Nifty balanced at the 24,000 mark. So in a 600-point range for the Nifty is just 1.5%, 2% to 2.5% for the indices. When you try and compare this with the global indices, you're seeing a range of almost 8 to 10% on the likes of Nikkei, Kospi, etc. So at least our markets are far off in trying to absorb this kind of volatility. In that environment, if all the major asset classes, like for example, if crude starts to ebb off and fall below 80, if all of those scenarios starts to become positive, it's eventually going to yield a breakout on the indices on our markets pretty soon.
So Kunal, what stock-specific trades would you recommend today?
So I'll go with L&T as the first stock. I'll go for a buy on the stock because I sense that I think maybe the worst could be behind at 3,800 levels for L&T. So would look out for targets closer to 4,100 for the stock. Stop loss could be kept at 37.30. The second would be about TVS Motors. I think auto stocks are making a very strong comeback. TVS Motors yesterday managed to come back towards a 3-day or a 4-day swing high. Would look out for a target of 4,100. Stop loss to be kept at 3,900.
Okay, on that note, let's take a very quick break talking about L&T. We will talk about L&T, but after this very short break, it came out with a mixed bag of earnings. How's the street reacting to those earnings? We'll tell you all about it in just a short while.